Happy Leap Day, everyone. Welcome to another episode of Moving Markets Podcast. It is February 29th, Leap Day 2024. U.S. stock market has only been closed for about 25 or 30 minutes at the time we're recording this today. Going to unpack a little bit about the PCE report, some of the good, the bad, mostly neutral. But neutral was a good thing today in the sense of the way the markets reacted to it. Didn't get a gigantic, crazy, wild move to the upside on excellent PCE numbers. Certainly didn't get a down movement at all on bad PCE numbers. In fact, those numbers came in right in line with what was expected, and that kind of saved the day, I think. So we'll talk a little bit about that. We'll talk a little bit about what, if anything, to expect different tomorrow, and a little preview of what's going to go on next week. Enjoy today's episode. So let's take a peek at what the indexes did. You've got the Dow Jones Industrial Average finished up 14 points. It's been a good portion of the day flat to very negative territory. Granted, 14 points up is relatively flat, but if you look at the intraday 1-day chart, the Dow was negative right up until about 30 minutes prior to the close of the market, and then it finally eked into positive territory and had a little bit of a rally to finish the day, a fraction above break even. S&P up 0.5%, and I believe that is a new record high close for the S&P. And then the NASDAQ up almost 1%, between 0.75% and a full percent. The NASDAQ had an absolutely fantastic day, led in large part by NVIDIA, AMD. AMD had a monster day today. Anybody, I don't know if you watched this or not, but AMD literally had almost a 10% move today and rallied strong right at the close of the day. It got a fair amount of that right in those, well, not a fair amount. It got a little bit extra right in those closing minutes and finished right at its high of the session. Absolutely phenomenal day on AMD. I've been saying for a while that for those individuals who may not be able to afford shares of NVIDIA, this, in my opinion, is the next best company to be invested in right now. And I would grab it while it's still under $200 a share. Close today at $192. I expect AMD before the end of this year to be trading over $300 a share. Even if the markets stumble and pull back a little bit, I think AMD is that strong a company. And I think very highly of NVIDIA. I think NVIDIA is going to be a way up as well. But NVIDIA is just plain and simply a more difficult company to own because of the high price. NVIDIA closed today. Decent move by NVIDIA, $15 a share, almost 2%. But it closed today right in that range and right close to that $800 a share mark and remains in overbought territory. I could see them pulling back just a little bit or flattening a little bit as they come down out of overbought territory, but still a stellar day, for the NASDAQ, and AMD had a lot to do with that. Let's talk about what happened today that caused the NASDAQ and the S&P to be up. Remember yesterday we were talking about this PCE report and basically said that if the numbers came in even just a little tiny bit higher than what the expectation was, that it would spell some doom and gloom for the market. If they came in right where they were expected to be, it would be, so-so, and certainly the ambiguity was in today's case a good thing. The numbers actually came in just a fraction, just a tiny bit better than what was expected. Or excuse me, I'm sorry. Let me take that back. The numbers were exactly in line with what was expected. So the consensus for the PCE month over month was 0.3%, came in at 0.3%. The PCE year over year was expected to be 2.4, came in right at 2.4. The core month over month expected to be 0.4, came at 0.4. The core year over year 2.8 came in right at 2.8. That nailing of those numbers, for lack of a better way to describe it, the fact that it just absolutely hit the mark and nailed where it needed to be is a large reason why the markets reacted the way they reacted. They it's kind of that sweet spot. Not too hot, not too cold. It's the Goldilocks scenario. Didn't do a lot for people's expectations on when the Fed might cut rates. Didn't do anything negative in the way of thinking that the Fed might do another rate increase. It was just kind of the perfect scenario to keep a little bit of a market rally moving in that direction, but not really throwing gas on that fire or not throwing a wet blanket on that fire. If you take a look at this week, and this is kind of, I predicted that up until the PCE numbers, this is what we would have. But I really thought today's numbers, we're literally trending for a week and a half now, right there between 50-50 and 5,100 on the S&P. Had a little bit down, a little bit up. And today's report didn't do anything to shake us out of that range one way or the other. It's, you got to keep an eye on the 20-day moving average here and look at how straight a line you can draw with that 20-day moving average. It just remains steadily to the upside. It just kind of continues to go steadily up. I don't know how much longer we can expect that to happen. I'm not holding my breath for this to continue all the way into and through second quarter. I think there's a better chance that we flatten or dip back a little bit and pull back a little bit going into the second quarter of this year. But we still got a month to go in the first quarter, and so far so good. The markets have been very good, very strong. I think the Dow Jones is up about 7%, 6 to 7%. S&P and Nasdaq both up about 7.25% so far this year. I love contrasting that with where we're at in our Safe Option Strategies trades, up almost 27%. I mean, we're not just crushing the market; we're beating it by 4 times over what the returns have been on the overall market so far this year, and we expect that to continue. So, I thought we'd have more to talk about. I thought there might be a little more going on with that PCE report, but every once in a while, it comes in exactly where the expectations are, and that certainly was the case today, and certainly helped steady things today. And I'm not going to talk just for the sake of making a longer podcast. That's all I have for today. We'll wrap it up right there, and we'll see you back here tomorrow at the close of the market. Thanks, everyone. Bye-bye.